Hello Staten Islanders, I'm Danny Panzella here with your 3-minute real estate update. Every week I will be bringing you real estate news and analysis based on my decade-plus years in the real estate industry, followed by 6 years as a journalist and activist investigating our financial system. We will be talking about both national and local trends that will affect your real estate portfolio, regardless if you only own one home or are a seasoned real estate investor, and especially if you're looking to purchase your first property. You will find the information contained in this vodcast invaluable. This video, I want to talk about October 2013. We saw the second largest jump in debt in U.S. history. The debt increased by $409 billion to a total of $17.1 trillion, not to mention $70 trillion in off-balance sheet obligations that include government programs supporting housing, education loans, bank deposit insurance, Federal Reserve holdings, Social Security and Medicare, civil service and military retirement obligations, etc., etc. We are now over the legal debt limit, as we are every single cycle, and the debt ceiling deadline has been postponed until February. By the way, the first largest debt increase was in October 2008 when Congress started the TARP program to bail out the banking industry, and that was a 1-month increase of $545 billion. The Fed continues to devalue the US dollar with QE3 stimulus. By printing more dollars, the purchasing power of the dollar is decreased, and the plan just seems to be to pump cheap money into the economy to artificially prop up the Christmas consumer season. And we're going to talk more about inflation next week in a little bit greater detail. Consumer credit standards are being relaxed. Once again, credit card companies are basically giving out plastic to anyone with a pulse. This trend has not spilled over into real estate. Lending restrictions in real estate are still pretty strict. Most banks are writing FHA-compliant loans so they can benefit from the government insurance. So what does that mean for the market? Basically, banks are laundering mortgage debt through the federal government, who insures or buys up mortgages that meet certain criteria. So the banks are basically lending within that criteria and keeping it pretty strict to that so that they can sell those loans to the federal government and then reloan that money. The stock markets and the real estate market will continue to rise somewhat as long as that stimulus continues. The next few years should be a great time to buy investments if you buy very conservatively and with lots of equity. So the question is, how long is this stimulus going to be stable? How long can we continue to just pump money into the economy before inflation destroys the middle class completely and just kills the tax base? How much more debt burden can the average American taxpayer handle? October's jump added almost $4,000 a household. When will unemployment, underemployment, and the fact that we really have no manufacturing base anymore, there's a lack of true economic growth. When will that meet the debt burden and cause collapse? It's something to keep your eye on. When buying real estate, you need to have the long-term goal in mind when the short term is so uncertain. So now is the time to buy income-producing cash flow properties. Put down as little as you can to make the deal work, and that increases your cash-on-cash return. If you're buying your first home, buy once, buy right. Now is not the time to buy homes for a midterm flip. If you're going to flip, you have to be prepared to do it within the next 3 years, or you're going to have to hold it for at least 10 years. I want to mention Bitcoin, which has had a big surge this week. For those who don't know what Bitcoin is, take a look at my video, Bitcoin for Dummies, and you can search that on YouTube. Bitcoin is an electronic currency made up of encrypted code that acts as a virtual coin that can be traded electronically all over the world. It's not subject to manipulation by governments, so it's truly a free market currency. And in light of the current US dollar woes, it's up to about $2.72 per Bitcoin. And it works a lot like PayPal. If you haven't looked at Bitcoin, you really need to look at it. It's a great way to hedge against inflation. You should not be saving money in US dollars. You're losing value every day when you just put money into a savings account in Federal Reserve notes. You need to be saving in silver, purchase silver, gold, or Bitcoin is another great way to hedge against inflation where you're not going to lose your value like you would saving with the US dollar. Next week, we'll talk more about the news and discuss inflation in greater detail. And thank you for tuning in. That's your 3-minute real estate update. I'm Danny Panzella, your host. You can check out my website, buystatenisland.net, for more information and analysis. And I'll see you next week.